Now we will do one finance lease problem and we'll do some journal entry exercise from Lease's perspective. Rick Kleckner Corporation recorded a right of use asset for $300,000 and it's a result of finance lease, and they did it on December 31st, 2024. Their borrowing rate and implicit rate was not known at the commencement, but this rate is given. We'll consider as the discount rate. The payment is made every period, which is $48,337. First payment is made on December 31st, 2024. The lease requires 8 annual payments, and the equipment also has a life of 8 years, no residual value. We have to prepare Lease's or Kleckner's journal entries, not on the first payment date, but on December 31st, 2025, which is the second payment date. So they already classified it's a finance lease, and they already calculated the lease liabilities or the present value of future payment. So on December 31st, 2024, they recorded it right of use asset and lease liability $300,000. They also recorded the first payment, which reduced their lease liability and they credited cash by $48,337. Now second year passed and we will record the journal entries. So first, if you remember, if you do the amortization schedule, when you make the second installment, you also split this part into interest payment and the other part that is reducing your lease liabilities. So first we will calculate those numbers and we'll also do the journal entries. And remember, the leasee, since it's a finance lease and the leasee actually recorded these asset and liabilities, you know the life and 8 years, you also need to record the amortization expense at the end of every year. So we'll do 2 journal entries, and you can do separate entries and you can combine all those. So here we will do journal entries for the second lease payment, and of course we will also the year's interest expenses incurred, we'll calculate and record that, and we'll show the differences between the lease rental payments, which is $48,337, and interest expense as a reduction in lease liability. Second, we'll do the amortization expense. So let's do the easy part. So this is December 31st, 2025. We'll do the easy part for the first journal entry. They are making the second rental payment or lease installment, and the payment is fixed, $48,337. So we will credit cash $48,337. And you know that this payment involves 2 things. One is interest expense and another part is the reduction in lease liabilities. So now you remember the first payment has been made a year before, so we will calculate what's the remainder lease liability was at the end of the first year, and the interest rate is given what should be 1 year's interest. That will be our interest expense. So let's record the interest expense. 1 year passed and 1 year's interest expense has been incurred. We will calculate the numbers. So here, if you take this at the beginning, the lease liability was $300,000, and then first payment was made at the beginning of the lease commencement, which was $48,337, and then you can take this remainder and then you can take 8% interest. So that will be the interest rate. So if you calculate it, 300,000 minus 48,337 multiplied by 0.08, you will see your interest expense. That will be debit, 20,133. So the remainder of this installment, 48,337, will be a reduction in lease liability. So we will, since our liability or lease liability is reducing, we will debit it. lease liabilities, which will be the difference between this installment 48,337 minus the interest expense 20,133. So lease liability will be debited by 28,204. 28,204. This is 20,000. This is how you will split the lease installment payment, second payment, and both are happening on the last day, December 31st. In your PowerPoint slides, you have seen the problems that the payment is made the following day, January 1st of the next year, but it's fine, you can combine the journal entry. Next entry will be to record the amortization expenses. Plain and simple, they will debit amortization expense, and we actually don't need to show any accumulated amortization. Rather, we will directly reduce our asset by that amount. So ROU, or right of use assets, will be credited, and then you know that at the beginning we recorded this right of use asset 300,000, and the asset term or the lease term is also the same, which is 8 years. So if you divide it, so every year you will recognize $37,500 as your amortization expense.